session showed choppy trading with unstable market sentiment. Traders observed policy decisions unveiled by the Fed Reserve yesterday. In a widely expected move, the US Central Bank cut the official funds rate by 25 basis points to 2.00%, citing moderate economic growth and a healthy labor market in the policy statement. The regulator signaled readiness to take appropriate measures to prop up economic growth. Investors took notice of differences among officials of the rate-setting committee as the vote was not unanimous. Besides, 7 voting members out of 17 are ready for another round of monetary easing until the year-end. The rest of them oppose another rate cut. So mixed signals of further monetary policy did not clear up market sentiment on the US dollar. This outcome confounds expectations of Donald Trump when he targeted the Fed's hawkish approach. The US president insisted on deeper monetary easing with the aim of reviving competitive advantage of US exporters thanks to the weaker US dollar. Nevertheless, the US dollar index, which tracks the dynamic of the greenback against the 6 major currencies, is still trading higher at near 98.50. Today, the Bank of Japan held a policy meeting. The regulator maintained the status quo, thus supporting the Japanese yen. The dollar-yen pair sharply went downwards from earlier high to trade at 108.00. Later today, central banks of the UK and Switzerland are due to announce their policy updates. Today, the economic calendar is loaded with the macroeconomic reports. New Zealand reported in its GDP growth. Australia released data on the labor market that disappointed investors. An unemployment rate rose to 5.3% in August, though an increase in the number of jobless people comes entirely from a growing participation rate. On the plus side, the number of employed people climbed by 34,700, stronger than expected. Nevertheless, the market focused on the negative aspects, bearing in mind the dovish stance of the Reserve Bank of Australia, which is ready for another monetary easing even after a series of rate cuts in June and July. Stock markets cheered the prospects of stimulus programs from leading central banks. However, the Australian dollar had its worst day in a month with the biggest intraday slump. The Aussie dropped to 0.7% to trade at 0.6784 versus the US dollar. Now markets are anticipating a policy meeting of the Bank of England, which is due to unveil policy decisions and post the minutes. Later today, traders will get to know data on US jobless claims, Philadelphia Fed Manufacturing Index and existing home sales. Canada will present an ADP employment report. Don't miss such important news. Subscribe to our channel and keep track of developments in financial markets. Stay tuned.